generally a 1/4% discount on your interest rate. What you need to do is effectively you're paying 1% of the loan value. The average house today, say, is about $400,000. It's 1% of whatever the loan is, not the purchase price of the home. And we're putting 20% down. Basically, 20% down is $80,000, so $320,000 loan. And let's say we're going to do 2 points, so we're going to take a 0.5%. So 2 points, 2% of this is $6,400. What would 2 points be? So if we take 0.5% and we multiply that, I'm going to assume the first year it's mostly interest payments. I'm going to take a 0.5% multiplied by 320,000, and this is about how much money I'll save the first year. It's not 100% accurate because your principal will be deducted over each month, but during the first year you're not really paying much down on a 30-year mortgage, so we'll just use this for simplicity. So what is a 0.5% savings on 320,000? That would save in the first year $1,600. So to break even, I'm going to have to keep this mortgage effectively for about 4 to 5 years. After that point, then points make sense, but I fully anticipate interest rates dropping below these numbers in the next 5 years, let's say. And then at that point, I would most likely refinance. For that reason, I wouldn't go with the points. It's just not worth it to me. I'd rather pay off my high interest debt with that money, which might be at 24%, and then increase my credit score and still get that 0.5% interest rate savings. By keeping your usage of credit below 30% and not opening a bunch of accounts, also paying debt off. I also disputed a couple of things on my credit report that were in error, and I've been able to go from about a 720 to a 804 credit score. Just think about that. That basically saved me more than a 0.5% of interest. In a rising interest rate, if we thought that it was going to continue to go up, I would still go with a fixed rate 30-year mortgage. Maybe then I might think about buying points. And if we hit a recession, which seems to happen about every 10 years or so, they'll generally drop interest rates to stimulate the economy, which then at that point you can refinance. All right, well, thank you for watching. Please subscribe and have a great day.